Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here. Been doing this since 2003 for individual traders and professional institutions. Okay, it's been since last Wednesday since I posted a video on YouTube. This is going to be a recording on the state of the market for our subscribers. And let's go and get started. First off, again, if you're viewing this on YouTube, the last video I did was on our KISS STS systems, which here's an example. And this shows our KISS system applied to 8 of the stocks that have been leading the market this year. Things like Amazon, Broadcom, Microsoft, Meta, Nvidia, Apple, AMD, etc. And what the KISS trend system is the long only system. And as an instrument goes higher, it suggests a smart trailing stop, which again allows you to stay in that instrument. The stops are placed wide enough to avoid a lot of noise, not get hit all the time, but tight enough that they can protect your profits where you don't give a bunch back. So today, for example, a new STS smart trailing stop was generated from Amazon, moved up from 113.10 to 115.60. All right. So if the market were to just dump really hard, you got an exit plan. And if the market continues to go up, it'll continue to raise its stops. None of these have been hit here. But again, for now, I'm allowing the public to use these. So if you go to breakpointtrades.com, that's 2 T's. Again, the link's going to be in the YouTube description. So go to Breakpoint Trades, go to Systems, KISS STS tables. These are updated once a day after the market. So we have a basket. We have all the NASDAQ 100 stocks, all the S&P 500 stocks. You can search. You have a column here. You can sort it by symbol. It tells you if there's, for example, on the basket here, Amazon had a new smart trailing stop today. So no one else has anything like this. For now, it's free for the public, but eventually, again, you will need to subscribe to breakpointtrades.com to continue to access it. But we're going to keep it free for now. Anyway, let's go ahead and get started with our market update. This is going to be an update on the market, state of the market for June 5th, 2023. This is our back-end recording that we use for the website. So let's go ahead and get started here. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, June 5th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. The same general theme as we always keep. And also, as far as trade ideas, guys, I only added a couple new ideas. We've had some fantastic ideas here. I hope you're catching them. But given the market looks a little vulnerable here short term because the VIX closed back inside its Bollinger Bands today. That's one thing I discussed to watch on the weekend. That officially is a VIX Bollinger Band sell signal for the market. So a little cautious on the market here short term. In fact, I took some shorts home. So I didn't want to add a bunch of new long ideas there, but I did add a couple. And again, as I stated here, the VIX did close back inside its Bollinger Bands. By the way, that's also a mechanical system. When the VIX closes outside its Bollinger Bands and closes back inside, that can give you objective buy and sell signals. Okay, so that occurred today. And otherwise, the market today, the S&P did rally higher to midday where it hit almost the 3,400 round number. Technically got to 42.9930. Close enough for government work, and this could be a logical area for the pullback. The NASDAQ triple Qs rallied to a resistance trend line on the channel where it found resistance. All right, let's move on. Item number 2 shows the index sector table, what transpired today again on the indexes here, mostly to the downside. The Russell, which had a big rally last week on Friday, was down the most today, 1.34%. The NASDAQ only down a tad. The NDX was actually slightly positive. NASDAQ down 0.2%. Small movement on the indexes. As far as the market sectors here, we follow 21 sectors. Most of them were down. Few the defensive sectors were up, such as utilities, drugs, healthcare, biotech. But otherwise, most of the sectors were down today. Currencies, US dollar up about or down about 0.2%. Cryptocurrencies down nicely. They have not been participating with the market, as you know, and the Bitcoin had a head and shoulder look to it, and that's playing out. I'll show that when we get to those areas below. Commodities here, kind of a mixed bag here. The index was down just slightly. Crude oil was up a little bit, 0.5%. Natural gas had a nice bounce back. It was getting severely oversold. Some weakness in the agriculture area. Precious metals were mixed with gold up slightly, silver down a quarter. GDX, the miners up, and fairly small movement in the bonds and treasury yields. Next. Item number 3 shows the economic news calendar. Today we had the ISM, factory orders, PMI, and really nothing on the docket tomorrow. So let's go ahead and get started with the charts. First chart below, item number 4 is a daily chart of the VIX. Again, as you know, the VIX closed below its lower Bollinger Bands on Friday. That put us on notice. And today it closed back inside, albeit slightly. But that is an official sell signal on the VIX Bollinger Band signal. And you can see the last couple signals were buy signals. We had a buy signal in early May when the VIX had closed outside its Bollinger Bands and back inside. And in later May, when it was outside its bands, closed back inside, which proved to be nice buy signals. This here is a sell signal. The statistics on this VIX Bollinger Band system, a profit factor of around 2 with around 70% winning trades. Next, image number 5 shows both the VIX and the VVIX. The VVIX is the volatility of the VIX, and they almost give the exact same signals, but sometimes they're a day off. So the VVIX, for example, closed back inside its lower Bollinger Bands on Friday for an early warning on the market. Okay, but both are now on sell signals, so that's why I am cautious this week. So coming into the weekend, my weekend newsletter, I discussed that Steve and I are looking for a pullback early this week, and then after that pullback, we're likely looking for maybe another move up to another high. Next, chart image number 6. So one thing I discussed on the weekend were these volatility systems. And by the way, 2 of these triggered today, one on the Dow, one on SPY that you see here. So they're just like the VIX Bollinger Band systems, but I run them on all these 6 instruments. So instead of just the SPY, which again, I'm using the VIX, I'm running all these other instruments have their own volatility indexes. So for the IWM, there's RVX. For DIA, there's VXD. Triple Qs, there's VXN. Many of you know that one. But even all these other instruments have ones, like for example, emerging markets. There's the VXEEM, USO, OVX. There's one for Apple. There's one for these individual stocks, Google and IBM. So I decided to develop these 12 VIX volatility systems, and it's something I'm looking to send trade notifications for on the website. They actually do quite a bit of trades. For example, this year, these 12 systems would have done 45 trades. Typically, they do about 100 trades a year. So again, today the DIA and the SPY triggered short as their volatility instruments were outside their bands and closed back inside. Next, image number 7. So here's the trades for these 12 instruments on the volatility systems. 45 trades this year. So despite the low volatility, where our other reversion and mean systems have not done many trades, like our SPY and ES systems, these volatility systems would have done quite a few trades. Again, they're short term, anywhere from 1 to 5 days. So very short term, they're mostly in cash, but you can see all the trades this year. Again, not everyone's a winner, right? But more winners than losers. And you can see the 2 open trades today. Next, image number 8. So here's the Mega 8 KISS systems, which I already discussed. Again, only new trailing stop on the Mega 8 was on Amazon. The trailing stop moved up today. Next, Chart number 9, here's the CPC put call. I discussed this on the weekend. Now in stock charts, this doesn't update until very late. I don't know why. It still shows June 2nd. But I commented on the weekend that this had closed at 0.76%. That's really, really low. And so we had quite a bit of complacency. All right, let's go ahead and move to the index charts. So chart number 10, here's the Dow. So the Dow, as you know, had a big the market had a big rally on Friday. The Dow finally broke out of this little falling. It's not exactly a wedge, but it broke over the downtrend line. Little give back today, but nothing more than that. The Dow is lagged this year. The other indexes, especially the Nasdaq, so it kind of came back to life finally on Friday. Next, chart 11. Here's the daily VIX. I mean the daily S&P 500. I'm sorry. So as you know, the S&P, we had that bear market in 2022. We put in a pretty decent trade low in October. We had 5 waves to the downside, MACD divergence, everything's set up, and we've been chopping up in this pattern ever since. But you can see on Friday, we basically tested this channel. We tested it again today, and logically finding a little resistance there. Next, chart number 12, here's another daily chart. So first off, the first target which we hit last week was filling this open gap from last August. That was a magnet. We filled that, broke out on Friday. We were up a little bit today, almost tagged that 4,300 area. Again, got within 0.8 points of it. You got the 61.8 fib just above. If we do get some up move tomorrow, to me, tagging that fib would be an immediate target. Otherwise, if we pull back, maybe we pull back here first few days, and then I think after that, then we rally again. That's our preferred view, but again, we'll trade whatever occurs. For the markets, we monitor, or we project, monitor, and adjust. Next, chart number 13, here's the S&P. This is a Rinko chart, so each box is 30 points, and I showed this in the weekend. Price had come back to this kind of resistance area. So logical area to see if the market struggles a bit. Next, chart number 14, here's a weekly view of the S&P. Again, you can see the upper trend line there, the 61 fib, and also down here you can see a rudimentary cycle. So this cycle low here back in March picked that bottom, and the cycle high here is projecting some sort of high in the market, maybe later June, July, something like that. Next, chart number 15, here's the 60-minute view of the S&P. Again, you can see how we busted out of this channel. And by the way, we had a symmetrical move here. See the dotted line? So the move off this low, that's where price stalled today. So that's definitely noteworthy. Take a look at your moving average ribbon. As I always state, things only get so far from the mean before they revert back. So moving average ribbon got extremely wide there, and it probably needs to work that off a bit. Now, this channel line could be a support, but if that's breached, this is your demand zone down here. We also have an open gap there, so that would be a likely target if we get follow through selling and lose this channel line. Next, chart number 16, here's a 15-minute chart. You can see first off the demand zone down here. Also, I mean, you can see again the almost perfect symmetry where we've pulled back from. By the way, marking this low here, this pullback here was larger than that, so you have a little symmetry break. If you look at the volume by price back here, you can see how, again, this area in here is big support. A lot of support in here by the volume. Notice how small the volume bars are there. Again, that's a thin zone, so price could easily melt through that if it gets down into there. Next, chart number 17, here's the 4 time frames. I discussed this on the weekend, but again, you can see, first off, on the half day, got a little resistance cycle up here, and look, a lot of these charts, look how wide the moving average band is. Here. That needs to be worked off, guys. They only get so wide here before they revert back to the mean. Notice we had a little A there, that's amateur buying, and you had a DeMark 13 and amateur buying there on the 78 minutes, so, and a resistance cycle. So everything's setting up there, so would expect some sort of at least a short-term pullback here. Next, Jobber 18, here's the daily KISS trend system for S&P. Again, the smart trailing stop's still really wide, down around 40.66. And, you know, when the so still plenty of room here. I don't think that's going to be hit anytime soon on this pullback. Next. Jobber 19, here's the triple Qs. As you know, they've led the market this year. And this steep uptrend channel, you can see price tagged that upper channel line today where it found some resistance. Next. Jobber 20, here's the weekly chart. Again, you can see the same channel. We're in this supply zone. Again, it's a zone. Remember that. Next. Jobber 21, here's a 2-hour chart, this clean channel. And you can see we tagged that channel last week, pulled back, rallied up to it again, tagged it on Friday, rallied today and tagged it. So that channel area is an area to take objective shorts. You also had MACD divergence there. Next. Jobber 22, here's a 15-minute chart. I didn't update this. I needed to move this wave count over here. But remember, coming into last week, we favored that pullback as a wave 4 and a new rally in a wave 5. And lo and behold, that played out. So we were correct on that assumption. Next. Jobber 23, here's the triple Q's daily KISS trend system. Again, it went long back in March 13th there at the vertical line. And again, guys, the system isn't perfect. You can see it went back long there in January. Market rallied up, sold off, it got stopped out, and then it righted itself, got right back in. So smart trailing stop still 334.70. Again, plenty wide here to allow some pullback in the market, not get hit. Again, the moving average ribbon's pretty wide here. Take a look at that. Also, take a look at this indicator here in white, the BPT4XMA. So what that is that's measuring the width of the moving average band here. And so that's normalized to 0 to 100%. And being up here near 84%, that is super wide. You can see back in February, it got over 80. That led to a little market pullback. And this is wider than that so it's pretty wide here, guys. You know, potential area for the market to have some pullback. Also, you can see a little doji on the daily. Next. Jobber 24, here's the 4 time frames. Again, same deal. You can see observe the moving averages. Little pullback late in the day. Next, Jobber 25, IWM small caps. Again, they had a huge rally on Friday along with banks, financials. Gave back a little bit today, essentially an inside candle. So I've been suggesting a stop there at 172. You could definitely probably have it higher than that at this point. It remains to be seen if we can get up into this supply zone up here and that wave E. You could see the A, B, C, D, E potential pattern. Next, Jobber 26, high yield corporate bonds. Market tends to follow them. They did the positive is they did finally start to rally up last week. They broke the downtrend line there, trying to hold it for now. Next, Jobber 27, here's TLT 20-year bonds. They rallied up last week, pulling back a little bit, but I'm favoring a higher low at this point. We'll see. Next, Jobber 28, here's a 60-minute view. Again, you can see the falling wedge that we had drawn played out for a really good rally. Because you did have a little symmetry break here, I am favoring a higher low. And by the way, look at the low. It tagged that 61.8 fib, so that was an area to go long, put a tight stop on. You could also see the moving average ribbon had flipped positive. It's coming back to a pinching area. Next, Jobber 29, looking at the sectors. Again, I'm not going to go over all the sectors here. A lot of the sectors were actually down today. And let's take a look at a few individual names. Jobber 30, here's XLK Technology. Again, the issue with XLK, 3 stocks, Microsoft, NVIDIA, Apple, I think make up like 50% of it. So anyway, it's struggling up in this supply zone, not surprisingly. Next, Jobber 31, financials, little give back today. Next, Jobber 32, KRE, regional banks. Again, they had a good rally a couple weeks ago off that demand zone and off that 14-year down uptrend line. Next, Jobber 33, healthcare. That's had a nice rally back up into these moving averages. A defensive name. Next, Jarbor 34, oil services, got into this demand zone last week, bounced off of it, down a little bit today, 1.7%. But, again, for now, it's holding that demand zone and this longer term uptrend line. You got a long term supply zone up here where we'll see if it can get up to there eventually. Next, Jarbor 35, here's the bullish percent energy index, BPENER. And this got into this oversold, let's call it a supply zone down here in the 20 percentile range, and was an area to look for lower risk entries on some energy names or the ETFs like OIH, XLE. And you can see OIH had a nice little wedge. That was a good buy last week. You can see it's trying to cross up over these moving averages. It already crossed up over the 890 MA here. Now let's see if it can cross up over this 20 MA for a confirmed buy signal. You do have some MACD divergence here to support that. Next, moving on to commodities, Jarbor 36, DBC. This is just the weekly chart. It's down 0.25% today, but again, it did bounce off and find support at its 200-week moving average last week. That's always an important area. Next, Jarbor 37, here's the daily. You can see this wedge-like pattern we got near the lower trend line bounce last week. Little give back today from the 20-day moving average. Next, Jarbor 38, crude oil did gap up today, but hold back. You can see this black candle. As you know, on the weekend there was some news from Saudi, from the Middle East, that they were going to cut production. Next, Jarbor 39, natural gas finally rallied up a little bit today, up 3.3% today. Again, it got quite oversold here. There's a long-term base, so we'll see if it can try to bounce up here or not. Natural gas is sometimes called the widowmaker. It's a very tough trader. Next, Jarbor 40, Boyle, that's the leveraged ETF. It had a steep channel here, so gapped out of there, not surprising. Next, Jarbor 41, copper, rallied off that lower trend line, and you can see it's above its 20-day moving average now, still below its 200-day. Next, Jarbor 42, DBA, potentially in this larger flag channel pattern. On a weekly, it's a flag. On the daily, it's more like a channel. Again, if you're long, put a stop right there at the low, that higher low at 2024. Next, Jarbor 43, URA, uranium ETF. I've been showing this sucker for last few years. I liked it back here in 2020 when it was emerging from this big base. You could see the moving average ribbon was pinched, squeezed, energy was bent up, and the thing had, nearly a 300% move up to 29.65. And since then, for the last year and a half, it's been consolidating into this coil pattern with declining volume. The moving average ribbon is starting to pinch again. The 14 RSI is holding this 50% area. I mean, it looks good. So far this month, it's up 8.7%. But, we'll see. I love the look of the pattern. I mean, I could see over time, eventually this thing could go up into the 30s. But again, guys, remember, each candlestick is a month. So you're going to have to be patient with this if you want to try to play something like that. This could take a year or year and a half to play out. So it's not something you get quick gratification on. Be aware of that. But I do love the pattern, textbook. Next, Jarbor 44, US dollar, down just a tad today. Again, there were no changes from what I discussed on the weekend. Next, Jarbor 45, Bitcoin. Remember I said Bitcoin was not participating with the market, had a head and shoulder, and look at this. Head and shoulder, back tested that neckline, selling off. Does not look pretty. Next, Jarbor 46, gold. Bounced off the lower trend line a week and a half ago. Stalled at the 50, 200-day moving average, pulled back, but still trying to hold this trend line here. Otherwise, we called for a correction in gold back in early May, and that obviously played out. Next, Jarbor 47, silver. Little pullback today. Next, Jarbor 48, GDX. This was up today. Remember, the stocks lead, so that's still a positive. Again, the GDX rallied off this demand zone. You had a nice, easy long last week. I still view this more of as just a trade long instead of a longer term swing, but we'll see. If you want to give it room, you could just have a stop at the low there. Next, Jabber 49, here's the 2 hour review. Again, you had a really nice, in late May, you had a nice trigger for a long, breaking this downtrend line, breaking the trend line on the GDX GLD ratio. I favored a wave A up and a higher to low, which we got that wave B. We did bounce here, but it remains to be seen if we're going to get this C wave move up or not. Next, Jabber 50, there's a 60-minute view of that trend line break. And let's go ahead and move on to some individual names. Jabber 51, Apple. So Apple, as you know, had their conference today. How many of you are going to buy their $3,500 AR VR? Probably none of you. Anyway, I'm a tech guy. I'm an early tech adopter, but I'm certainly not going to buy it. Anyway, so today Apple went up and sold the news. Remember, typically sell the news event, but you could see it got up near that upper channel where it found resistance. Next. By the way, what's the KISS system saying for Apple? So the KISS system went long back here in mid-January, right here. And again, obviously didn't catch the bottom. That's fine. But look at how many times it's been able to raise its trailing stop. The trailing stop it's suggesting is 172.80. So it's raised its stop here a good, 20 times or so. Next. Jabber 53, here's NVIDIA. Next. Jabber 54, Netflix. This was a long idea of ours out of this coil back in May. Broke out of the coil, back tested it, found support there. Just textbook, rallied up, stalled at the top, this resistance, pulled back, flagged out, gave you another chance to go long. Now today looks a little extended. Look at that inverted doji. Next, Jabber 55, Tesla. Now this one continues to hold up. Again, their bullish view is you had an ABC 3-wave pullback. You broke out of a channel. This would be a potential symmetry target over time around this 260 area. That also matches with like a little gap back here last year. So we'll see if that plays out. Short term, it is getting a little extended. Next, Jabber 56, CELH. This was a long idea of ours early last week. It pulled back. We marked it as an obvious fourth wave. And by the way, it was absolute textbook. You triggered off that high of the doji. You could have put a stop right there to low, and boom, played out. Congrats to anyone who played this. It was an awesome pick by Steve. Next, Jabber 57, SEMO was a long idea of mine a couple weeks ago with a resistance over this 55.63. And look how well this puppy's traded. Now, I'm not perfect, guys. I sold it way too freaking soon. Anyone still long this, congrats, but tighten those stops up. Next, Jabber 58, PLTR was a long idea of mine also in early May. Breakout, cup and handle like pattern, and boy, this thing has been awesome. Next, Jabber 59, NNOX was a coil pattern I put out last week when price was right at the low of that coil. Busted out big time on Friday. Was even up today, but then finally gave some back. I like coils because they have these explosive moves. Coils are also called, never mind. Next, Jabber 60, LYEL. This is a long idea as well, low price stock, but it obviously played out from this little ascending triangle. Next, Jabber 61, CMRX was a long idea in this falling wedge I put out back in mid-May. Rallied from $1.20 to $1.50, then formed a flag, and I said look for another pop, and that's what it's doing. Next, Jabber 62, Disney. I showed it as a falling wedge last week, so even the mouse gave us a buy. Nice trade out of that wedge. Next, here's some other ones to monitor. Jabber 63, GLBE from last week. It never triggered. Still valid over that 36 area. Next, Jabber 64, SONM was posted by one of our subscribers this morning. Tight coil started breaking out today. Again, it's rather thin, but nice pattern. Next, Jabber 65, SYM. Here's another coiling type pattern. And finally, Jabber 66, XMTR. It's been on the list. This is a long idea back in early May out of the space. And I'm watching now to see if it could take out this next resistance. Finally, Jabber 67, ALL, American Airlines, got a resistance here to monitor. And there you go, guys. Like I said, I'm not going to force the issue here. market may need to consolidate, and we'll see what happens this week. Have a wonderful evening. Take care.